Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.
Good morning. It's Friday, June 12th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures Metals Minute, episode 681. So if you're looking for some weekend reading here, be sure to register in the link in the description below for the Navigating the Week Ahead. It's released every weekend here, and the report will cover the key events to look for next week, some of the insights, some of the observations in the gold, the silver, the copper, the U.S. equity markets, U.S. interest rates, volatility, and the dollar, all your cross-asset picture there. So let's take a look at the overnight price action here. Precious metals, also the risk assets, the cross-asset picture, because we do have a lot of green on the screen here. So stocks, bonds, metals markets, they're all extending the rallies as fresh confirmation emerged that the U.S. and Iran are nearing a deal to end the war. So Iran's semi-official news agency reported that a draft agreement has 14 provisions, including the reopening of the Straits of Hormuz and the release of $24 billion in frozen Iranian assets. So the group was seven. They are looking at potentially signing a deal here as near as Sunday over in Switzerland. So we'll want to pay attention as J.D. Vance get on that airplane, because that was a tall tale sign when he did a U-turn here on the way to the airport. Last go around, and then the equity market sold off and everything else. You saw the rug pull on the precious metals. You saw yields go up. You saw oil go up and everything else. So keep an eye on that here. Camp out in front of his house and look for that limo to pick him up and take him over there. So starting with the overnight session here, looking at the precious metals, they are higher across the board. You do have the gold contract here sitting at $42.33. That's up $118, up 2.8%. You go to the silver market, up 5% here at $67.15. And then you go over to platinum, palladium. All you do have platinum up about $57 here, palladium up about $65. Palladium, interesting enough here, was one of the performance leaders last week, up about 3.8%. You had Bitcoin up 5% as your best performing commodity out there. Deeply oversold. A lot of people looking at kind of this double bottom on the charts here. It washed out to the last February lows right around 61,000. Looking at the futures contracts, trading right around 63, 64,000 as of this recording. The Russell 2000, look at that chart as well. And then also look at the mid caps, because those have been a stellar performance leader as well. So the Russell 2000 up 3.6%. Your laggards on the week, well, was the rug pull on the crude oil market, down 6%, and then gold and silver each down about 3%, even after this rally that we're seeing here today. Now, gold-silver ratio sits at about 63-1, and the question really is this bounce going to hold? Are we moving on up to about $72 on the silver market? Is gold targeting something like 4,500, building on that, and potentially going up to that 5,000 mark here? So really, what you want to look at here is the expectations for interest rate hikes coming out of the U.S. here. So it pushed out all those 2026 heights, and that's where you get the repricing. That's where you get that snapback of $4 in the silver market. That's where you get the gold market extending its rally and things like that. And the dollar index dropping below that 100 handle, falling down to about 99.48. Now, the thing about the currency markets here is September is the front month across the board, and September will be the front month on the U.S. equities as well. So you want to roll those positions over if you are in any of those June contracts. So looking at the ETF flows here, what we see in sells across the board yesterday: gold, silver, platinum, palladium. The exchange-traded funds cut about 264,000 troy ounces of gold in the previous holdings. In the previous trading session, bringing this year's net sales to 1.3 million ounces. So it was the biggest one-day decrease since April 22nd and the fourth straight day of declines. On the silver side, they cut about 473,000 troy ounces of silver. So year to date, you look at the ETF flows, gold down 1.4%, silver down 8.7%. Did have a lot of new market participants coming in, looking at 100-ounce contracts on the silver market, going as far out as December, also looking at different call spreads on that market here, looking at things like in the 70s up to the 80s here, buying one call, selling the other one against it here, and then looking at like October, September, December, all those contracts going out. So the cross-asset picture is clear here with the crude oil market down about 3.3%, sitting at 84.74. A lot of traders looking at the December contract and the March contract here, because you get down to those contracts, they are trading in the mid to high 70s here, thinking that there's a limited response on the downside in the oil market. Now, Goldman Sachs did cut its forecast, and that's helping push that price here overnight here. They cut prices by about $5 a barrel. citing higher supply and lower demand into the next year. Now, looking at the copper market, because copper has been one of the more resilient commodities that I've been discussing with many of the clients out here. Copper futures are up about 2% here as of this recording. It's the silver market up about 4 point something, but copper up 11.65 cents, trading right around 640 on the June contract, 645 on the September contract. And it's really the U.S. declaring a power emergency in the southeastern U.S. here, as forecasters warn a dangerous heat here that's likely to stress those power grids along the country's east coast. The point of that is that you're gonna see more copper demand as they need to revitalize some of these power grids here, expand the power grids, and that's where copper, I think, has structural support across the board. And that's why oftentimes, like I'll be on CNBC on Tuesday, I'll probably be talking about the copper market, because copper has been one of those commodities here that is a key element in a lot of different areas with limited mine production here, problems getting the sulfuric acid, and that's where you see this supply-demand imbalance take place. Now, part of the reason why the precious metals had rallied so much yesterday, well, you had 10-year treasury yields dropping from about 4.53% down to about 4.45, and it was really that breakdown below 4.5 that really escalated prices significantly higher. Now you look at the dollar index again, 99.49. You look at the oil market weaker. You look at 10-year treasury yields weaker, and that pushes up that gold and silver market. The volatility index here, well, yesterday's volatile session here pushed the gamma exposure back to more neutral trend here. So really they're on the fence. The option dealers waiting to know, hey, are we looking at suppressing volatility or expanding it? So we'll really want to see probably some adjustments to that once the SpaceX IPO comes out. Now you look at European trading, those stocks advanced, led by banks, travel, and leisure, and the only sector in the red was the energy sector. And you go to Asian stocks, they rallied across the board with tech stocks. They rebounded here with the MSCI Asia Pacific Index jumping about 3.5%. That's the most more than 2 months here, and South Korea's Kospi led the gains here among the regional benchmarks, surging about 8%. So that's a very volatile market over there, and that has been one of the ones that we've been keeping an eye on here as an indication for what kind of volatility we're going to expect in the U.S. here. So the only economic data coming out is University of Michigan sentiment here, and we are in the Fed's external communications blackout period here until they have that next FOMC meeting where they're expected to leave rates unchanged. So be sure to register for navigating the week ahead in the link in the description below. I'll be sending out the chart back here later on today, and then also Blue Line Capital will be sending out our weekly note here with some of the highlights of what the moves are in the portfolio as far as on the wealth management side. If you'd like to learn more about wealth management solutions, shoot an email, Phil over at bluelinefutures.com, Phil at bluelinefutures.com. And remember, futures and option trading does involve risk of loss, may not be suitable to all investors. We've got World Cup kicking off the weekend, representing England over here. I think that they're going to do great. We will have USA here playing out later on today. So you guys have a great weekend. Avoid that heat. And let's see what happens in this World Cup. Good luck, good trading. See if that gold and silver
Futures
hold.
trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.